I'm a professional funded prop firm day trader, and in today's video, I'm going to show you the strategy I use with order blocks to pass my funding evaluation and get funded with 300K to trade with. Because in trading, it's not always about picking every area to trade from, it's about knowing the correct and high probability areas. Enough of the chit chat, let's go ahead and get into it.
They're going to be net short. So what does that mean? That means that while they're going to hold longs from this candle right there through all of this, because they're so net short that they're still making tons of money. So this is the true process of hedging and pairing orders and also setting up the market for later. So this is the way that the cycles of the market work. I think that it's very important that no matter what you trade, whether it's smart money, whether it's bull flags, I don't care. Whatever it is that you trade or whatever strategy or school of thought that you follow, you got to think for yourself and you got to start applying those concepts in different ways. I've seen a lot of it in the smart money community. Like the biggest one I've seen is when people go out and they start using volume profiles and footprints with smart money and stuff like that. And there's going to be like those people that are in smart money that like hate on that, which is really stupid because I think that becoming a good trader, like if you just look at famous traders that you know of, like were they like trading just solely like one way based off of something they learned? No. Today's stuff, we're not even going to be mixed strategies, and who knows, maybe it'll evolve into that. But that's why I kind of want to make it like a group effort. But one thing I've started to notice are these order blocks that they're basically so in the old ICT stuff in like 2016. The definition of an order block is much different than what he will use today, or much different than what a lot of courses or what you guys may have learned is an order block. And it can get a little confusing whenever you have multitudes of different different styles or different parameters that make quote an order block or a fair value gap or a breaker block or supply demand, whatever, all these different names. There's a lot of different ways to interpret things. So I think it's important that, we take all that to an account, but we can also kind of like put a spin on things. So if we look at this candle right there, this candle, this is the last candle, like the last up candle before a down move. The general idea of it is the last up candle before a down move or the last down candle before an up move. Now, whenever we're looking at it on a 4 hour, this may be one candle, but if we look at it on like a 1 hour, or maybe we might get something that looks like this right here, right? Like this up move before the down move. Now, if we're looking at this chart, which is the 4 hour, we're going to see these up candles, which on the daily is going to be one candle. The whole idea of an order block is basically either the buy to sell, which means the up before down, or the sell to buy, which is the down before up. So the idea of the order block is that smart money is always manipulating the market. And if the true intention is to go down, then smart money is going to push it up in order to trick people into a false narrative. If an order block is basically just a false move in price, we've talked about the time efficiency. There's a lot of different stuff we can talk about based off that. So number one is, let's say we have a weekly opening price. The market moves around. We have a big push down. And we're going to look at this as our, the manipulation early in the week. The idea of this push down, you can call it a Judas swing, you can call it manipulation, whatever. There's so many different ways you can word this, where it's power of three, where, if there's time involved, if it's just maybe one candle before a big up push. So, this big move that we look at on a weekly level. So for instance, if we have that manipulation early in the week and then we put in the low of the week and rally, the ideology behind this move and its simple order block, just like that we just looked at, is this exact same. So again, the basis of an order block being what an order block is it's a false move in price before a true move, right? To manipulate traders. Let's look at it from a different perspective. That if this move is to go down and generate that false narrative before pushing up, is that because the evil market makers just want to laugh at the masses losing money? Why would they want to do that? And this is where smart money takes hits a fork in the road. And this is why a lot of people look at it like some like conspiracy theorist bullshit, right? It's not to like just force you out of your position, trap you and destroy you, like how a lot of people act like it is. If indeed the whole idea of this is to push price down and generate liquidity. Why would we not require liquidity to be taken? Because you learn order blocks and you're like, oh, okay, well, this is an order block, this is an order block, and this is an order block, and this is an order block, and this and this, and you see what I'm saying? And you're not wrong based off what you've been taught. So how do we know which ones to pick? Because again, when we're trading, we need to refine our edge, and that doesn't just mean what time of day we trade or what asset we trade or what models we trade or what concepts we trade. It means where do we look to trade? How do we filter it? How do we look in more specific areas? So that's one thing that I've been really trying to develop recently is how do you put yourself ahead of what you've already learned and take out a lot of the nonsense, so to speak. So my thought process is, if going back to this example, if this is the idea of manipulation, this is pretty much smart money embodied. Pretty, if it's whether it's weekly power of 3, whether this is daily power of 3 after the Asian range, and we get to leg manipulation, whether it's power of 3 like we have on Bitcoin that we've been talking on the streams for however long, where we have this major, maybe it's forming a yearly candle, where we have this accumulation, manipulation, distribution, whatever it is, again, all of it is just a false down move to then move back up. I mean, maybe I'm getting too early, maybe we don't see that, but the idea, I think you guys get what I'm coming at, or what I'm getting at. If we require liquidity to be taken for our daily power of 3 or our weekly power of 3 or the morning rate we take on indices or the order blocks we select, we want to see institutional volume with that. If I'm smart money over here, let's say there was liquidity that was being sought after right there. So smart money had to push price above this level and hold it there in order to obtain this liquidity up here before sending price down in its true move. So if smart money wants to push price above a level and it wants to hold price there, it's going to have open orders doing so. So this day right here, notice this day we close above that level. So that, and this goes back into like some of the teachings of, the more simplified versions of explaining, why candle closes are important. That means that while they're going to hold longs from this candle right there through all of this, because they're so net short that they're still making tons of money. So this is the true process of hedging and pairing orders and also setting up the market for later. So this is the way that the cycles of the market work. This kind of breaks it down at a, on a deeper level and helps you understand why people would use a candle close and why not, why maybe not use them or whatever, why they're relevant, I should say. So if smart money is aiming to push price up into this liquidity pool, it's going to have to push price up and it's going to have to close above this area because this is where the breakout level is. So I think a lot of people think that price is going to go this, it's going to go, damn, we're done, we got it all, we're moving down. That's not always the case, because I think a lot of people up here, at this time, I remember we actually longed like this day right here and up into these highs. But, a lot of people up here were looking to buy and hold. They're like, okay, we're breaking out of this resistance level. Oh, we're breaking out of this resistance level. Like, we're going higher. The stock market crashes over. And, that's a great opportunity for smart money to not only offload profits that they got in down here, but also enter sells that they are looking to get in up here because they're able to get into sells up here. So if they're trying to push price to an area where they're able to enter the market, and this is where overall macro structure gives us direction. So let's say if we're in a bearish market and we have this right here, then this is the true direction, right? So while, large bodies that are moving the market are long here, and they're still probably long here, and they're building longs here, they're going to be net short. So what does that mean? That means that while they're going to hold longs from this candle right there through all of this, because they're so net short that they're still making tons of money. So this is the true process of hedging and pairing orders and also setting up the market for later. So this is the way that the cycles of the market work for all sorts of traders to get long here. And guess what's going on when they're getting long? Well, smart money's letting them get long. They're providing, and again, let's go to Citadel's website. Just take a look at what their job is to do. And this is where you understand, you start realizing, like, this is how this is meant. This is how the the markets are meant to work. So let's say we provide liquidity to ensure institutions and retail investors can trade what they want when they want. So again, that's like a fucked up way to put that, because that just sounds like, oh wow, they make the markets available to everybody. No. They let people do what they want when they want, but they control what that is. So for instance, what do people want to do here? This is the when. What is that they want to buy because we're breaking our resistance. So they're going to make that possible for them, because they're going to sell to them, because for every buyer up here, there's got to be a seller. Guess who that seller is going to be? It's going to be them, right? So they're making the market attractive to trade by giving it volume, but they're making sure that they make money in this process. So they're going to be net short above these highs. So if we're looking at kind of the move, so let's just say they got in longs right here, and they don't have stop loss. These are hedges, but I'm just going to draw this. Let's say they got in longs right here. Does this look like the idea of this was to make money? No, it was not, right? So once they have gotten their true move, which is going to be shorts, which is going to be a ton of shorts up here, and who knows what their targets are if they've already targeted. Let's just say that their target was, let's just say they got in up here. I'm throwing a random stuff here. We're going to say they got it in this candle, and their target was down here. So you can see this was their big move, right? That was where they made a lot of money. So what about this position right here? Did they hold that the whole time? I don't think so in this example, because if we look, where did they get the biggest amount of their positions? Probably this candle, because it took a lot of orders to hold price above this high, because there's a ton of liquidity up here where people are getting stopped out. There's a high chance that we're going to reverse, but they're going to make sure we don't do that. So these candles, the order block is closing above this candle, this liquidity. And this doesn't have to be a major pool of liquidity like this. It could have been a candle like this, right? It could have been on a low time frame. This is the daily, and I'll show you. We talked about on stream some examples, but if we're actually trying to trade these concepts, so to speak, you want to make sure that it makes sense. Or I do, because it helps build confidence in your system, and it'll help you develop something maybe different than what you've learned, which is just last candle. You know what I mean? And this example, this is where we see things line up, because you can say, okay, well, it just was this candle, but I want you to go and back test. We're going to look at some examples of this logic instead of just the last candle. And this is also a lot of times, if you ever see, like, for instance, a lot of people be like, okay, well, this is the last candle before the big down move, which I wouldn't look at like that. Or they might even say this was the last candle before we, really got movement. But this is where people get kind of left behind, and they don't have enough trade opportunities to pass a funded account or to make a good deal of money, especially for you intraday guys. And oftentimes I've noticed that this is what's going on. Like, you wonder, why the fuck did we bounce off of that right there? And this, it can be a candle from a long time ago. Like, notice, if you're just looking at this, and we hadn't talked this today, I think there's a very low chance you're going to pick this as your order block. So let's look at this example. Obviously, it just closes above liquidity. There's two examples in this chart. I don't know if you peeped this down here, but look, and this is what I was talking about, in the sense that you get this push down, this closes under here, and then we get a big push up. And you notice it's not always like a tap and move away like that, but it gives you that context, because again, like we were talking about, all trading, whether it's smart money or not, revolves around context. And push off. That's what this is right here. Run on liquidity, run it again, push off. So we're looking at the reference point to what was the institutional sponsorship in that little model. Let's go this down candle. Don't go and expect every single one of these to work, so to speak. It has to be in context of like the overall general narrative. So if the market makers got, let's say they got long in this area, did they hold these the whole time that the market was going down? Well, not the whole time, but I think that they held them until it was, because once it gets engulfed, now those orders are set to be mitigated. The market is net short. This is our way of confirming that the market, whoever's moving the market is net short, right? They want to take out highs or come back and mitigate their orders. So if these buy orders right here are needing to be mitigated, they're going to have to push price back into that zone. Right? Oftentimes, it's going to be to equilibrium of that zone. Not always, but oftentimes it's going to be to the 50% line. So if we look at this example, barely passed it. And you notice this was on a day that we had high impact news. That's why I think that it was that was where the mitigation needed to occur. So again, if the market makers or whoever is net long here, and then they go net short, so that the overall, and this is just another way of saying the market's bearish, then they're not going to want to hold these longs, even though they could literally hold these longs until they took their full profits on their sells down here. If they held their, those longs all the way down here, let's say if you had a a 2 lot buy from right here, but a 10 lot short from right here, and you close them both right here, you still made a ton of money. But that's not how, smart money is going to work. They're going to be greedy. So they're going to push price back up and mitigate those buys. And when they close those buys, they're selling. So that's why the market's going to push down extremely hard. And that's why you see this happen when the market moves aggressively into these levels. Yeah. Do you think everybody in the world was buying right here? No, I don't. Do you think everybody in the world was buying right here? Probably. 3 white soldiers in the day, gap up, we're going hard. That's what a lot of people would say. So you want to look at those areas, ask yourself, after you've developed an understanding of what I'm talking about as far as how to pick these order blocks, it's really just a candle that is pro daily bias, so to speak. If the bias is bearish, you're going to look for bearish order blocks that close above high value points. Kind of like why, if we're bearish, why are we closing above this point? Well, it's probably to start that manipulation. And then Wyckoff people are going to look at this like distribution. You want to see a displaced move into those levels, and that can give you a really good bias because as soon as they close those shorts, if it's correct, you're going to see massive pushes like this. Now I want to go back even more. So look at the time. That was 8:30, right on the dot. That we're moving, making that move away. So guess what? Everybody's probably doing leading up into that CPI. Everybody's speculatory buying. And then also another thing that this goes in context with is, let's do the overall. There's Monday at midnight, Tuesday. So remember, the weekly power of 3 is that we develop a range on Monday, which then gets manipulated into that higher time frame point of interest. So again, you can see how all these different things kind of coincide whenever you're starting to get those really high value areas. And this doesn't have to happen on a daily time frame. It doesn't have to happen with high impact news. But I think it's important that it happens with time, like it should happen during session. Let's go back and just look at a couple examples. I know that was kind of like a lot of information. I think you guys probably benefited off that. And I'll dive deeper into this, start back testing it more, but I just wanted to share that with you guys so you can start playing around with that model and just watching for candles like that. But overall bias on Euro was bullish, so we're looking at reference points to get involved. This was the clearest one for me. And now, would I have even looked at this before? Because was this the last candle before break structure? No. Was there a massive displacement after it? No. All right, but it was a down candle that closed under liquidity. It was immediately engulfed. So that tells me that these sell orders were, bullshit, for a lack of a better term. They were just to stop these traders. So if market makers are trying to push price up, and this is where it comes into algorithmic theory, is there a guy doing all this actively? Probably not. It's probably trading bots, so to speak, very advanced bots that are doing stuff like this. That's why it can happen on an intraday level, and that's where ICT comes in, and you guys know the rest. But so I entered the market. I was watching. I try not to trade forex before 8. I know the kill zone is after that, but I entered the market after the next candle when we were sitting in this fair value gap, because to me, I was bullish. We were in my reference point, and we got a nice displacement, leaving a fair value gap right there. So that was enough for me to enter the market. But when I look back, I noticed after I entered the market, after I was in it for a little bit, I started noticing, I was like, damn, there's one of those right there. It's like the same thing you just traded off of. This is where I kind of had a light bulb. And I was like, I even put it in forex chat. I said, the market needs to reverse right here, this candle. Well, I had a line. I think it was on a different chart. But I said, market, it needs to reverse, because I looked at okay, if we go under that, then this trade's wrong. I'm probably going to be stopped out. It is what it is. But I watched it pretty closely, and I was like, that's pretty crazy. Like, look at that reaction. The market never looked back, right? Obviously until the day was over. But and then look how these levels are protected. Like, even when we come back down, the market's pushing away pretty violently. So it's something that I see it, and I've tested a little bit more on NASDAQ 15-minute charts, and it works extremely well. Like, a lot of the times we're going into these raids in the morning, we're hitting these candles. So I think it's a little gold mine, so to speak, and I think it definitely has some work. Maybe not, maybe it does, but I just wanted to share that with you guys. That's pretty much it. But the reason I went in so in depth on explaining like the logic behind it is because I think it will help it stick in your brain a lot better and put it into more perspective. Because I think a lot of people get like so bored with ICT because he's just like what I just told you would have been like fucking 8 hours of ICT, and it would have been filled with like, and you can't do this, but I can do this, and I can trade, so I just try to, because I've watched every last bit of that fucking shit, and it is like watching fucking grass grow. But there is great value to be got from it, and I know that most of you guys are not going to watch most of it. So I just that's my whole thing, is I'm trying to build a simplified vehicle that will teach the actual important points, and also use those points to kind of come up with my own points or or spin-offs of it that work better for me, and hopefully they'll work better for you. Thanks for making it to the end of the video. If you want access to the private Discord, use code CASPER, all caps, to start your free trial. That's where I provide my trade signals, teach my private classes, and you have access to one of the best trading communities out there. I really appreciate you guys taking the time to watch my content, and if you ever have any questions, feel free to hit me up on any of my social medias. They are all down in the description with the link to Playbit. Have a great day, and remember, if you can't see the liquidity, then you are the liquidity.